The Property Bulletin by London Property, the home of superprime.
Propertymark is urging all sales and lettings agents in England to take part in a new survey shaping future qualifications and regulation in the property industry. Unlike Scotland and Wales, England currently does not require agents to be formally trained or licensed, raising risks for consumers and inconsistency across the sector. The survey, led by the Lettings Industry Council's ROPA working group and co-chaired by Propertymark's Timothy Douglas, gathers views on qualifications, experience, CPD and regulation. It's anonymous, takes 10 minutes and is open to all agents in lettings, sales and block management. Key goals: push for mandatory Level 3 qualifications and CPD. Establish a statutory code of practice and licensing. Improve consumer protection, trust and professional standards. Propertymark strongly supports regulation and encourages professionals to make their voice heard. UK Business Secretary Jonathan Reynolds has firmly dismissed the idea of introducing a wealth tax, calling it daft and populist. His comments come amid speculation over how Labour will address a growing fiscal gap, with some senior figures proposing a tax on assets over £10 million. Reynolds argued that taxing illiquid assets like art or fine wine would be impractical, and he stressed the need for serious, realistic financial strategies. Chancellor Rachel Reeves has not ruled out tax changes, but has avoided commenting ahead of the autumn budget. Though Labour has increased certain wealth-related taxes, e.g. on private schools and inheritance, Treasury insiders and economists agree a full-scale wealth tax is unlikely due to complexity and the risk of driving wealthy individuals abroad. A revaluation of high-end homes or increases in capital gains, dividend taxes, remain more plausible options. Daniel Austin, CEO of ASK Partners, urges the UK Chancellor to deliver bold reforms in the upcoming autumn budget to revive the stagnant property market and support long-term growth. He highlights the urgent need for clarity, investor confidence and systemic change to tackle the housing crisis. Key recommendations: support SME house builders, unlock land access, streamline planning for small sites and offer government-backed equity to help smaller developers scale. Fix the planning system, cut delays and remove political conflicts by introducing independent decision-making and private sector help. Boost construction skills, address post-Brexit labour shortages with a focus on off-site construction and industry training. Prioritise social housing, empower councils to build at scale and reform land acquisition rules. Fast-track brownfield development, grant automatic permission for ESG-compliant sites to encourage sustainable growth. Attract investment, restore investor confidence with clear pro-growth policies. Real estate debt and niche sectors like data centres and later-life housing remain attractive to investors. Austin warns that without decisive action, the market will remain stagnant and the government risks missing its housing targets yet again. Luxury houses in multiple occupation, HMOs, are gaining popularity among experienced property investors in London's prime areas. Driven by strong rental yields, growing demand for high-quality shared living, and restricted supply due to Article 4 planning rules, HMOs are now viewed as high-performing, income-generating assets. Key insights: stronger yields and demand. Luxury HMOs often outperform traditional rentals, especially in areas like Kensington and Chelsea. Average annual income for HMOs reaches £40,000 versus £32,000 for single-unit lets. Financing and compliance. HMO lending differs from standard BTL. Lenders assess rental yield, licensing and landlord experience. Compliance documentation, e.g. licensing and certificates of lawful use, is critical for securing funding. Article 4 restrictions. These limit new HMO supply, increasing the value of already licensed properties. Investors focus on acquiring compliant assets or navigating planning with expert help. Design and management. Premium tenants expect en-suites, modern kitchens, smart controls, and sustainable features. Ongoing maintenance and responsive management ensure profitability and tenant retention. Investor appeal. HMOs offer tax-efficient structuring, especially via limited companies. They're increasingly seen as a resilient long-term strategy in a tightly regulated and high-demand rental market. In short, luxury HMOs present a strategic, high-yield opportunity for informed investors navigating London's evolving housing landscape. Leaseholders at Northwood Hall in Archway, London, have avoided paying a £55,000 legal bill after the upper tribunal ruled that their landlord, Triplark, cannot recover its litigation costs through the service charge. Triplark had attempted to pass on expenses linked to disputes, including with a court-appointed manager, to the 68 leaseholders. The tribunal found these legal costs were not directly related to building management and thus not chargeable under the lease terms. The case highlights wider concerns in leasehold law, where landlords often recover legal costs from leaseholders, while leaseholders rarely do unless landlord misconduct is proven. Ongoing reforms aim to fix this imbalance, as campaigners push for fairer legal protections in leasehold disputes. A member of the billionaire Thomson family, owners of Thomson Reuters, has agreed to buy a luxury apartment in Mayfair, London, for around £25 million, $43 million. The deal is one of the biggest in 2025 and reflects growing North American interest in London's prime property market, despite recent price drops due to a higher stamp duty and tax changes. Other notable buyers include tech investor Matt Kohler and fashion mogul Tom Ford. The Thomson family, Canada's wealthiest, has seen their fortune grow to over $106 billion, boosted by strong 2025 earnings from Thomson Reuters.
Subscribe to our newsletter to receive our weekly bulletins and stay ahead of what's shaping the super prime property market.